the fringe debate. Say good morning. Have we pressed the button on the camera? Right. Hello to the internet. Anyway, hello. If we haven't met, I'm James Kirkup. I'm the director of the Social Market Foundation. You are here, I hope you know, for this discussion with our friends at the Institute of Faculty of Actuaries. I'll possibly here for a free breakfast, I don't know. The housekeeping, that camera is, correct me if I'm wrong, that is, we are now live to the internet, is that right? And YouTube, you're all YouTube stars in the making. So while obviously it's a cozy and collegiate room, we're also being joined by an infinite number of Russian sex bots on the internet. This session will be out there on YouTube forever, because on the internet nothing goes away. So just bear in mind that, bear in mind when we get to questions and discussion. So the I've got any more housekeeping. I normally have to tell people where the fire escapes are. If there's a fire, run that way, scream. We're here to talk about property premiums in insurance. Now, if you don't know us, the Social Market Foundation, we are a cross-party think tank, and we are, as the name implies, interested in markets and their role in society. We often talk about ourselves as a fair market think tank, as opposed to a free market think tank. If you really want to stay for another hour after this, I will talk to you about German order liberalism and the philosophical origins of the SMF, or you can leave and grab back and roll. So what do we mean by fair markets? We mean markets that work properly for all the people in them and can therefore command the consent and support of publics and electorates. So really, we use the property premiums very central to what we do, and we think to confidence in a market economy that, by and large, is the best way to deliver prosperity, growth, and happiness for all. So we are interested in the functioning of markets in lots of different contexts. This obviously is a relatively, dare I say, niche subject, but a very important one. So we're very glad to be working with our friends at the Institute of Actuaries on it. You're going to hear shortly from, see if I can get the order correct. I think first we're going to hear from Hilary Salt, who is from First Actuarial. Now, Hilary, your role at the Institute of Faculty is you're on the
Policy Advisory Group.
Policy Advisory Group of the Institute. We will then hear from Martin Coppack of FairByDesign. You all, I'm sure, know Martin. Between them, the IFOA and FairByDesign have over the weekend produced a tremendous report on the property premium in insurance, being where, yes, copies are available on the internet as we speak. I shouldn't say nice things about it. It wasn't done by us. But it is good, very interesting. We'll hear a lot about it. Mark will run you through that research and its recommendations. And then finally, the final definitive magisterial word will be delivered by, I wasn't supposed to give you a
No, carry on, you're doing really well.
Okay. By Marina, Ahmad of the London Assembly, Labour's lead for the economy on the Economy Committee of the London Assembly. That committee, I think before you were on it, produced a report on property premiums more widely in a previous session. Maybe we can persuade the committee to go on and return to that subject in future. So that's the overview. I will now, I think, hand over to Hilary, and then obviously after we've heard from all the panel, we'll have a questions, comments, thoughts from all of you, and then that'll be it. Okay.
Thanks, James.
Hilary.
Thank you, and thanks for joining us to discuss the property premium in insurance this morning. It's really nice to see that people think this is an important topic, as we do. I thought it might be helpful just to give you a bit of an introduction to the Institute of Faculty of Actuaries for those of you who aren't necessarily all that familiar with us. So we are a Royal Chartered professional body who represent around 32,000 actuaries, not just in the UK, but worldwide. We oversee the education of actuaries through to qualification, and also provide continuing professional development for our members to support their lifelong learning. And we're really keen to fulfil our public interest duty by contributing to policy discussion in areas where we feel that our members can aid with their technical knowledge. And this area of the property premium in insurance is an area where we believe that our analysis and insight can shed light on the debate. And we're really delighted to be here promoting and contributing to that debate at the Labour Party conference. Our members work across the whole area of insurance, from product development to risk analysis and modelling, right through to the marketing of products. I think we've been really pleased and delighted at how well it's worked to take this great opportunity of partnering with FairByDesign on this report, because I think our technical knowledge and insight and their policy focus have worked together really well to produce a better understanding of the property premium, and also supported our being able to identify some potential solutions and responses to it. So let me say a few words about the technicalities. I promise not to get too actuarial, but I think it's important to give you a bit of a flavour of what the issues are here from a technical viewpoint. So I'm sure everybody understands the kind of basic insurance principle of pooling risk. Pooling risk works really well when you don't really know who the good and bad risks are. The problem in today's society is that obviously we know more and more about people, and it's very hard to pool risk by everybody paying, roughly the same premium if you know who the good and bad risks are, and you know exactly how much cross-subsidy happens when you do that. And it's quite hard to continue with that methodology when people really see those cross-subsidies happening. In fact, I'd argue we've seen a bit of a perfect storm for insurers in the way that they approach risk, because there's three factors. The first is that I think society as a whole has really moved away from a kind of belief in collective solutions to more of a belief in individualistic solutions. And clearly insurers are not outside that political shift in thinking. But secondly, there's been what you might call a corporate shifting of risk to individuals. So the area that I work in my day job in pensions, there's a really good example of this with the closure of high quality defined benefit pension schemes. And at the IFOA, we've been working quite a lot on some of those wider issues through our great risk transfer project, which you can look at on our website. The third issue I think is really important just to grasp, and we talk quite a lot about this in the report, is that there is lots more data available about people. Not just that data being available, but we have many more techniques and tools to allow us to analyse and use that data. And all those things, I think, come together to make the way that we view risk and how we use risk in insurance pricing these days to be, to see that used in a much more granular and individualised way. And Matt's about to disagree with me. I might want to perhaps defend our ability to use and analyse that data. But I think it's then a very political question to say, should that data be used directly in the pricing of products in the way that it clearly is now? Because the outcome of that trajectory is that it does exclude all risks from being able to access insurance at an affordable level. And the report looks at how what this really means in the real world to ordinary people. I know Matt is going to talk more about that, so I won't spend time on it now. Except to say that it is a real issue in the real world. So some of these debates, I think, do draw out quite an interesting point, which is the issue of it's not really clear what we mean when we say fairness in insurance, and there's clearly different views from different stakeholders about what that might mean. So one view is that fairness should mean pricing the risk fairly in a kind of actuarial way. So it's a fair premium is paid so that people who perhaps have lower risk, lower likelihood of making a claim, pay less. And certainly, there's a popular acceptance of that kind of a principle as well as an actuarial one. But there's also an alternative, and I think equally valid view, that fairness is about all consumers being able to access an appropriate level of cover at an acceptable cost. And so debating where we as a society want to be in those alternative views of fairness, I think, is quite important, and that's what we hope we can do in this forum. And I think, where that public discussion leads, it's possible for insurers to adapt to the world as we want it to be. So my final point is I just want to come back to the role of actuaries. I think it's right that we stress the point that whatever solution we feel is the right one, actuaries can help with that policy direction. And I know Matt is going to go through some of the recommendations in the report, but I wanted to mention some of the practical solutions that the report outlines. So one is the potential for the introduction of kind of reinsurance scheme, which is similar to the one that operates now, that allows people to afford flood insurance, people who live in high risk flood areas, to afford that insurance through a reinsurance arrangement. And actuaries have been working hard to make that work.
Can I just interrupt that at that point? Because it's possible that we may have got some people who might not be lifelong insurance experts. Shockingly, if we find them, we'll throw them out. But could you possibly just expand a little bit on how a reinsurance model works for the lay audience?
Of course, yeah. So with a reinsurance model, the kind of policyholder doesn't really see this happening. This is kind of something that all gets trued up in the background. So you offer policyholders the opportunity to buy risk at an affordable level. And then insurers work with government to make sure that there's a cross-insurance industry mechanism that allows those premiums to be used in part to buy additional insurance through the reinsurance market that allows all those risks to be managed appropriately within the insurance framework. So, it's absolutely possible to do that kind of thing. You don't necessarily have to call it reinsurance. There are other mechanisms that work in other countries where, for example, people all pay the same for car insurance, and those risks are trued up through a mechanism within the insurance industry in the background. So that's one option. Another option is the introduction of micro-insurance. And people might think that that's something that's not really for the developed world, but certainly it is an area where you can develop a way of offering basic but really affordable cover. Perhaps if you have a delivery mechanism that might be something like, for example, housing associations. And the third option that I think is worth thinking about, particularly in this audience, is the provision of some cover through employment. And I think there's a role potentially for trade unions to play here. You can see this working perhaps most obviously for things like life insurance or income protection. And I think you could build that on the back of the success of auto-enrolment in the pensions arena. So I think there's a real role there for employers to help. And I say in all those areas, actuaries are ready to help with pricing, risk modelling and analysis. I am, of course, a great believer in expertise and the role of experts. But I think it's quite important to recognise that experts need political direction in order to kind of channel their expertise properly. And I hope the debate that we have here today can help provide some of that political debate and direction. Thank you.
Thank you very much, Hilary. You provided a seamless segue over to Martin Coppack with his report. You've pretty again for people who there might be people here who might not be familiar with FairByDesign. I might want to describe what you do at FairByDesign.
Absolutely. Thanks very much, Hilary. I too am thrilled to be working with the Institute of Actuaries on this. I've learned a lot about actuarial science. I've just about kept up. Thank you very much. And the other thing is I could talk for hours about insurance because I've worked in financial inclusion a long time. And it's the least debated aspect about what it means to be financially included, financial resilience in society. We know the biggest reason people get into problem debt is, and Grace knows this because she's published on this at Step Change, is the fact they have income shock. Why don't we channel all this work to help people upstream to manage income shocks? But I'm going to keep it to 7 minutes, just so everybody is aware. FairByDesign. Okay, so FairByDesign exists to eliminate the poverty premium. That's the extra cost poor people pay for essential services, including insurance, energy, and credit. Today, I'd like to talk to you about two things. What the insurance market is like if you're on a low income and in poverty or in vulnerable situations. Often these two things are linked. And what some of the solutions look like. Much of this is in this fantastic report. Please go online and check it out. Okay, we live in a world where we're all encouraged to take responsibility for ourselves. We're told to save for a rainy day, save for our retirement, but we're increasingly also told to look to the market, to look for our protection needs, the protection needs of our family. We're told not to rely on the state, look to the market, be a good citizen, be a good consumer. But what happens if you're not seen as desirable by the market? Perhaps you've had ill health in the past. What happens if you can't afford to move to a different postcode? One that is deemed as less risky by the actuaries. What happens if you can't earn enough to pay for protection full stop? These are major problems that are only going to get worse as we move away from pooled risk analysis to one of individualized risk profiling or risk calculation. I would argue that we're creating an ever-efficient market that works really well if you're healthy and wealthy. The irony being, those who need insurance the most can't get it, or they're priced out, pay a lot more. As our report shows today, those on low income and in vulnerable situations often fit that non-standard box in insurers, or the high-risk box, or the pre-existing condition box. Throws them into this higher premium bracket. At the same time, what an interesting market insurance is for consumers. How transparent is it for a consumer to actually say to the insurer, I challenge the price you give me. How have you calculated this? Insurers will not share the information because it's commercially sensitive. And secondly, even if they did share the information, a consumer wouldn't be able to make head or tail of it anyway. Very unique consumer market in that regard. As this report shows, this leads to big questions, but I'd really like you to look at a couple of pages in this report around real big questions around how insurance adheres to the Equality Act. Insurers have to make sure that they rely on reasonable and relevant information when it comes to their calculations. There are big questions on this. And who can look at it? Consumers can't challenge it. People in poverty are already paying a poverty premium. The average household in the UK pays just under £500 for life's essentials around energy, credit and insurance. What's super interesting is that over the last 5 years, insurance has become the biggest contributor to the poverty premium. Car insurance being the biggest aspect of that. Some people are paying nearly £300 because they're living in a deprived area for their car insurance. And if you can't pay up front, you can pay up to another £160 on top of that. What's more, people with certain protected characteristics are also likely to be paying a poverty premium, an increased poverty premium. Our research, also on the FairByDesign website, with the University of Bristol, suggests that the UK marketplace is now discriminating against certain groups of consumers with protected characteristics, even if this is indirectly. In terms of insurance, the researchers found that if you're from a Black, Asian or other minority household, lone parents or disabled person's household, you're more likely to actually be without insurance. And we call this the latent poverty premium, because such people are really susceptible to income shocks and then have to resort to paying over the odds to get out of such income shocks. So, for example, higher rate of credit. At the same time, we know income shocks are the leading reason for problem debt. As Grace knows I'm quoting from her report here, at Step Change, 14 million people in Britain have at least one income shock within a 12-month period, and 4.5 million experience 2 or more income shocks. Millions spent on bankruptcy, on debt write-offs, on debt advice, and government benefits. Wouldn't it be better to go upstream, tackle these problems at the beginning with affordable, appropriate protection for all, saving all this money, but also all this misery? So what needs to be done? Insurance companies I speak to all agree individually with me, this is a big problem. But this is a market-wide problem. I totally get it. If an insurer, an individual insurer, goes against the grain of the market and starts to go from individualized pricing to pooled pricing, they're going to lose money. What is needed is a market-wide solution. To me, there's three major barriers to progress here. Belief in competition meeting all consumers' needs, where choice exists for everybody. I've heard that a long time. Now, I know there's a few people from the consumer movement here, and we've heard the phrase many a year, and a power of consumers driving the market. I think we have to challenge that every now and again. Number two, a real lack of ownership around poverty and exclusion issues between regulators and government. And a lack of joined up approach. Number three, lack of joined up approach between regulators and government. This is an issue that bridges social policy and regulatory policy. And unfortunately, people's lives don't match institutional remits. We actually need to look across this. I've lost count of the times over the years. I've gone to say the Treasury on this situation. They say, "Oh, can you prove market failure yourself, you and your two members of your team?" Unfortunately, not. Okay, go to the Financial Conduct Authority. It's a bit social policy, it's a bit regulatory policy. Can you go back to the Treasury? Oh, maybe you should go to the Competition and Markets Authority. They span different markets. This is an individual regulatory situation. Go back to the FCA. Try the Equality Human Rights Commission. We don't have access to the information, and we don't have the resource. Have you tried the FCA? So I think you're getting the flavour here. But this happens on the biggest issues for consumers are those that fall in between the regulatory social policy gap. I'm only going to talk about two recommendations here. There's many more. Do take a look. First of all, can we get the FCA to do what the Treasury Select Committee asked them to do, which is look at the current underwriting process. So let's look at how far we can use the regulatory powers of the FCA in terms of how well is the market working. They are the only institution really has access to the information and can get it. Once we know that, and also looking at how well insurers are adhering to the Equality Act in terms of reasonable relevant information, we have clarity on the social policy interventions. And also ask they look at things outside of protected characteristics, such as low income and where people live. With that clarity, government really does need to lead this debate, need to get industry, regulators and businesses together. Businesses know this is a problem. They won't necessarily say it publicly amongst a public forum. A bit like the loyalty premium. The loyalty premiums, it's about the whole thing. If you stay with the company, you price walk upwards. If we address it market-wide, industry generally, it's much more positive on that aspect. Flood-Re has also already been described to really like that model. More recommendations in this. So on that note, I'm going to hand over, but I'm really looking forward to some healthy debate on this. Thank you.
Thank you very much, Martin. Now, you've just framed it very nicely. That question of where this policy area sits in to government and politics. So it's really fitting that we hand over to our practicing politician here to see what thoughts from the Labour Party, and not the Labour's opposition at the moment, but what can and should you be doing to try and join up some of these some of the dots, force a better response from the state generally, government and its agencies, and describe the glorious vision that awaits us in the day one numbers of the future Labour government. Marina.
Well, first of all, can I just point out that there was meant to be another politician here who was the expert, and this may shock you, but I'm not an expert in insurance, and I was asked to do this very late on a Friday afternoon. So I've been asked.
Very, very grateful.
Thank you very much.
There will be a round of applause when Marina finishes, even if it's from me.
Thank you. So my perspective is very much from a London perspective, and I think we've heard from two panellists, from Hilary and Martin, and absolutely they are the experts. What I'm going to do is talk a little bit about poverty in London, which I do know about. But first of all, what I'd like to say is how pleased I am that this report has been done. Because when I was given it on Friday afternoon, I just thought, sure. And then when I started to read it, I thought, oh my God, and what made me realise, and it really made me think that this actually is, and I suspect you might agree with me, it's a hidden issue. People don't think about insurance and poverty until it's highlighted in the way that it has been. And personally, when I was reading the report, and it's not a long, onerous report, it's brilliant. It actually does what it says on the box, and it gives the recommendations of what we need to do next, but it sets out the issue and the context. And it did bring up a lot of personal issues for me, because there was a time in my life where my husband and I just got married, and we had no money. I was living on benefits, through no fault of my own. The job that I was doing had folded. My husband, he had no minimum wage at that time. This will shock you. He was earning £1.40 an hour in a restaurant, and that's how. And for me, I remember so clearly. I was driving a really clapped out old Mini Mayfair. Loved it. She was called Claudia. I loved it. But she, the insurance was too much to pay in 1 year, so I had to do it on the direct debit basis. And I remember at the time feeling really angry that I was paying probably about 50 quid more than I would have been if I could have paid it, the year's premium in one go. And I felt punished because I didn't have the money to do what other people could do. And I know we call this issue the poverty premium. I'd like us to be really honest here, because actually it is a subtext, and the subtext is being punished for being poor. And the evidence that the fact that Martin just outlined the fact that families living in poverty pay an extra £500 more than people who could pay, who don't live in poverty. That to me is a punishment. You're being punished for being poor. So just let's look at London, and the reason London is important, not because it has the Globe Theatre or anything like that, even though that's in my own constituency, which of course is the best GLA constituency, and I don't want to hear any nonsense about Camden and Wembley. It's Lambeth and Southwark, my constituency. So London, as we know, is England's richest city, but it's also the poorest with the highest levels of inequality and deprivation. 27% of Londoners live below the poverty line after housing costs, compared to 21% in the rest of England. The cost of housing in London, you know this, is such an important issue, and that paves the way, I think, for London's higher poverty rate. 50%, and this is such a shocking statistic, 58%, nearly 60% of people living in poverty are in a family where there is at least one person who works. Now, as in my own constituency, I am so tired of hearing people who come to tell me their situation, and they are doing 2 or 3 jobs, but still cannot afford to make ends meet. I had this, I was actually in tears. I'm a hard-nosed politician, but I was in tears because I knocked on somebody's door, and the guy turned to me and said, "Well, what are you going to do for me?" And what it was, he looked absolutely exhausted. I could see 2 kids in the background, very young, running around. He explained day shift, so he did the night shift. His wife did the day shift. They couldn't afford childcare, so he was staying awake to look after these 2 young, very boisterous children. And the bit that really just broke my heart was, he said, there was a fun fair at the end of the road, and we could see it. And he said, when my kids want to go to that, we have to say no, because we can't afford that. And as a parent myself, I went into afterwards, I sat down and I actually cried, because it was such an awful situation. This family were doing the absolute best that they could do, and they couldn't afford to take their kids to the fun fair that the kids saw every day. And that's the reality of people's lives. And what that means in just figures, hard-nosed figures, it means that 1.3 million people are in that situation in London alone. And that's a shocking increase of 50% over the last decade. Now, what's been happening over the last decade? Let's think. A little bit of austerity was that. So what does my head in about the government and the decisions that were made with the coalition is that they went for the low-hanging fruit, for the people who could least afford to have things like benefits cuts. And we now have the situation that exists with very little that I can see that's being done to put and resolve those problems. So when we have issues with insurance, so people might not think about insurance because actually they're too busy thinking about, I've got damp coming in, I can't afford to do this because I haven't got the money. I am the worst one, and I know it's become a bit of a cliche, but it is so true. Are we heating or eating this week? Nobody in the 5th richest economy in the world should ever have to make decisions like that, ever. So food insecurity remains high in the capital, and it's the only region of the UK where the number of food parcels distributed. In the capital where the number of food parcels over the pandemic more than doubled than anywhere else in the country. Food shortages in supermarkets and the loss of income in the first wave of the pandemic saw food banks in London struggle to stay operational, and it actually led to Sadiq Khan stepping in to coordinate supplies to ensure that Londoners got the food that they needed. 5th capital of the 5th richest country in the world. Just like the rest of the country, London is about to face a fresh wave of people living either on the very edge of poverty or tumbling right in because of the changes in government policy. The universal credit uplift, which, credit where credit's due, they did the right thing. They put this, we've had it now for the time that we've had it, and it has been an absolute lifeline for people. £1,000 a year if you're living in poverty is not to be sniffed at. But that goes on Thursday. And it doesn't matter, politicians, even from the Tory, high-profile politicians from the Tories have said this is going to be problematic. You've got footballers who are coming out and saying this is just the wrong thing to do. They're not listening, basically. But then added to that, furlough comes to an end on Thursday, and we know that this will lead to higher rates of unemployment. We also know that national insurance is going to go up in the next few months, which is going to be hitting those on lower incomes. And the more than doubling of inflation, when those figures hit a couple of weeks ago, we were told that they were temporary. We now know in the last week that actually that might not be so temporary. So who's that going to affect the most? Energy prices are about to rocket. And I really don't need to tell you about the fuel crisis, do I? Because we've seen what's been happening with petrol. And it took me hours to get here on Saturday because we were trying to navigate the queues outside petrol stations. So the people least able to pay for it are going to have to make that choice. And I said about food or about keeping warm over winter. I am sick of hearing about children going hungry on the streets of London in 2021. As far as I'm concerned, we do not have the right in this country to accept that on our streets because of where we are in the world in terms of our economy. Now, one of my mantras as the Labour spokesperson on the economy at City Hall is that if you kick London, you kick the rest of the country. And that's because almost a quarter of the country's GP, my husband's a GP, I was talking to him this morning about it. Almost a quarter of the country's GDP is initiated in London. And for example, last week, Sadiq announced the whole thing about all buses becoming electric. Well, those buses won't be made in London, those buses will be made in Yorkshire. And what that means is that for a number of years, that will help that local economy, it will create jobs. So, that there's that knock-on effect. What happens in London affects other things in the rest of the country. And one of my other mantras, of course, is that the government needs to stop kicking full stop. Stop kicking London full stop, because that is what's happening. We know that that's what's happening. Now, just going back to this really excellent report, that one of the challenges that the report sets is for the government to step in and allow for people to take responsibility for their own financial health. That's a good thing. That's a really good thing. It's about people taking responsibility. However, that can't happen in the situation that we're in now. And that if we want people to do things like save for their old age, insure their valuables and property, there needs to be a policy shift to enable that to happen. And Martin gave some really good examples of how that needs to happen. And whilst as a party, we believe in the levelling up agenda, it means absolutely nothing if the economic aspect of lives of people in poverty isn't put under a microscope and significant changes introduced. I'm going to leave you with the one quote that absolutely shocked me, stuck out like a sore thumb in the report. And it was where a panel, so there are a panel of people who can't afford insurance effectively, and a panel member actually said this: it's a bit like Hunger Games. If you have money, you survive, and that's not good enough.
Thank you, Marina. I think it's testament both to the compulsive power of the report and also to Marina's serious interest in the subject. That having read a report about actuarial science and black box algorithms, that you actually decided that you were going to attend the event and not make an excuse like Matt Rodder did, mentioning no names. The shadow editor sends his apologies. He was called away at last minute and therefore is not with us this morning. I've got a couple of questions I'm going to ask for thoughts on the panel before I go to all of you. The first question, I think, just really falls on very neatly from what Marina was saying about sort of the context of this issue being a hidden issue, something that's not really, often it's not part of sort of national political discourse, if you like, even though we are currently talking a lot about the cost of living issue, crisis, if you like. So the very simple question for you all to speculate on, I suppose, we know that the cost of living is rising. We know that all things being equal, don't know, but probably the universal credit uplift will be cancelled. Given the evidence in this report, the lived experience that's you demonstrated in the panel organised by Toynbee Hall, was it?
Yeah.
Where essentially people, for a number of reasons, on low incomes, look at insurance products and say, actually, sometimes I'm just not going. I'm not going to bother. I'm walking away from this. Are we facing, do you think, a significant rise in the number of people who will go uninsured as a result of that cost of living crisis? And is there the easy part of the question is that problem being adequately recognised by the group that we grandly call policymakers? Martin, you.
Oh, okay.
You're smart.
I'm smiling because I spend a lot of my professional life going in between different organisations saying this doesn't fit my remit. And I used to be a regulator myself for many years, so I do understand the complexities of this. I'm just reflecting back as well. At FairByDesign, we are very much based around co-designing solutions with people with lived experience of poverty. So we have a strong partnership with Toynbee Hall in the East End of London, and they fed into this report. And I remember the session very, very well, talking about insurance. And as soon as you get past the word insurance and start talking about the issues, you do get some healthy debate. And I just remember one of the panelists saying to me, "I just don't get it." She says, I have to have car insurance, it's compulsory. But when I ring up and say I live in E1, they just say, "We don't serve you." And the sort of dread, and that I've been classified as not worthy of this. But then when you translate that into policy speak, which I try my very best to do, and bridge that sort of social policy, regulatory policy aspect, people say, "Oh, well, we can rationalise that. We're economists, we're competition specialists. They're more costly to serve." And it might not be market failure, it could be markets not working well. But I tell you what, that person in the East End of London didn't feel like, "Oh, that market's not working well for me." So discrimination was actually used during those conversations. And another aspect of our work at FairByDesign, I'm going to plug the hell out of this too, is that around inclusive design. What does that look like? And we spent a long time working on this area, and we've made publications for regulators and social policymakers about, can you just think about the people who aren't in the room? And also, can you put your institutional remit aside just for a minute? Rather than saying, there's a market issue going on here, right, these are my tools, I'm going to come up with this solution, maybe get a focus group on it, away we go. Actually, no. What's it like for the people wrestling with this issue? What do they think is the solution for this? Work backwards from that and create your policy around that. Because I'll tell you what, it's almost always a mixture of social policy and regulatory policy, and it won't fit your institutional remit. But you need to, if we're going to make any movement on this, And there's a practical guide online at the FairByDesign website for policymakers, but also for people who create insurance and people who make.
I want to start rationing your plugs.
Okay, no more plugs. Actually, I'm gonna stop there then for the minute.
Hilary.
Yeah, so let me say first of all that I think my aspiration would definitely be to eliminate the poverty premium by eliminating poverty. And I think we should all have that aspiration. So I kind of think that goes without argument. But in the interest of us not all just agreeing with each other in this room, I just wanted to kind of put a bit of a different slant on this, because it does seem to me that the people who we haven't mentioned so far are the kind of sharp-elbowed middle classes who actually quite like risk-based insurance premiums. And it feels that it's very hard to have this debate without thinking, well, there needs to be a political discussion with that part of society as well, who I don't think would actually necessarily agree with everything that's in this report, because I do think that a redistribution of insurance costs away from high risk towards the lower risks is not uncontentious. And certainly, many of our insurance colleagues would say that that's quite a hard discussion to have with your policyholders. So I do think we've got to think that this is not just an obvious, there's only one solution to this. I think we've got to think that this is very definitely a political issue that needs resolving by political discussion and debate. I guess one of the things I would say is that one of the things that has been, I think, quite good about the individualisation of risk and granular approaches to risk is that it has been something that insurers have been able to use to kind of encourage good behaviour. So, for example, if you look at that swathe of young men drivers who at one point would have found it almost impossible to get insurance, the way that insurance has been opened up to them and made accessible to them is through the black box and telematics. And that has, not only meant that those people, are not disenfranchised from insurance anymore, but also has encouraged good behaviour amongst those drivers. So I just wanted to put a little bit of the other side of this equation, because I don't want us to just all sit in the room and agree with each other.
Thank you.
I love that sort of debate where we all sit down and agree with each other. I think that's nice. So the short answer to your question is, with everything that's going on, are there going to be less people insured? Yeah, of course, absolutely. And again, you may agree with me on this. Terrible, we're all agreeing with each other.
The next question will shatter any consensus.
But the issue of insurance is often seen as a luxury item, and so therefore, when your income goes down, which is what's going to happen, it's the luxury items that you don't buy anymore. So yes, that is, and I think that becomes a problem for the country actually, because there's going to be a whole swathe of people who maybe are insured now, but when all the things that I've described and more hit, they're not going to be doing that, or that level of insurance that they have, and that can have all sorts of knock-on effects as well. And just in terms of what can we do? I mean, Martin, you gave a brilliant example of when you take it to people in the industry, it's somebody else's issue, somebody else's problem. And actually, I think that what needs to happen, and I think government does need to step in here, where government has to say, look, we're telling you now that you have to get together and resolve this. This isn't somebody else's problem. This is an industry issue that you need to find an industry solution to.
Thank you. Right, the less consensual question, I suppose. A couple of propositions for you all to discuss. Martin, you used the word discrimination. Economists would say discrimination is good. Price discrimination is a good thing because it means that resources are being allocated according to the price, the value to which the buyers assigned them. The industry might counter that in this case, individualized risk pricing is a good thing, allocatively. The industry might also say, why is this the insurance industry's problem? Why are you trying to fix this through industry, through market regulation? To go to cars. If my car is twice as likely to be stolen as yours, Doesn't it make sense that I should pay more for my insurance? And if I face an elevated risk of my car being stolen, isn't it the state's job to fix that through better policing and anti-crime policy? So shouldn't we really, instead of writing reports about fixing the property premium insurance through regulatory market solutions, shouldn't we essentially be talking about anti-poverty, crime, health, all the rest of it? I mean, isn't this, are we approaching this from completely the wrong end of the telescope here? Who wants to? Who wants to respond to the devil's advocate point?
Okay, well, can I perhaps step in by defending data?
Oh yes.
So I think sometimes this debate becomes a debate around you should be able to use that data. That's data that isn't appropriate to use for these circumstances. And perhaps to give you an example, so our insurance colleagues in Japan have taken a picture of every single roof in Japan. There are 4 different types of roof in Japan, all of which react differently to typhoons. And so, one kind of typhoon will affect one kind of roof much more than the others. So they then used AI to work out, when you have a typhoon coming in, where will all the danger be? Well, where will all the damage occur? Now, they don't use that in pricing at all. That's not used at all in pricing insurance products. But it is used to make sure that when a typhoon hits, the loss assessors are in the right place. They have the resources available to do, immediate remedial work to stop any further damage. And it feels to me that, that there are things like that mean that actually we shouldn't be scared of collecting data and using data, because I think it actually can be used very much for good. And some of the things that you talk about, the need to make sure that the policing is in the right areas. I think actually we've got a lot of data that would help to assist with that. So let's not get too down on data. I think the real question, I think this is very much a political question, is should that data be used to price, individuals according to their risk? And as I say, as actuaries, whatever the political thrust of a decision on that is, we can help with it. I don't think it's right to say that actuaries say that this is the one and only answer. We can help, and we can show how that data can be used if society thinks that individual pricing is good. And you're right, a lot of people do think individual pricing is good. The people who risks, will say very clearly, well, why should I pay for those feckless people over there? That's the kind of response you would get. I'm not saying they are feckless, by the way. Just that is the kind of response you get to those discussions, and that's why I think this needs to be a wider debate than perhaps just us in the room, because I do think that society.
YouTube, hello YouTube.
I think society hasn't really grappled with these issues and made decisions, and I do think that's a political debate that needs to be had.
That's your cue, Marina.
Right,
Political debate.
Well, Hilary, I mean, I love the fact that I've just learned about Japanese.
Thank
you.
How was your conference? About Japanese roofing and typhoons.
And the whole thing about being a good risk. I mean, I'm a brilliant insurance risk. I had my car insurance the other day. I could not believe how low it was. I mean, admittedly, it hasn't evolved much beyond the Mini decades ago is now a Honda Jazz, but I couldn't believe how low it was. And part of that was because probably the area that I live in, all the sort of things that I'm supposed to do that makes me a good risk. But you asked about whether discrimination is a good thing, and yes, I absolutely agree with you, Hilary. Agreement again, that data collection is really important, because as coming from a background of relying on research, needing to know where the issues are, data collection is absolutely invaluable. My problem is that when that data collection not intentionally, it's just because of the way the system is set up, where it effectively does discriminate against people. And Martin talked very clearly about protected characteristics. being, having higher insurance. So if you come, I think the report actually highlights particular communities. So I think it's the Bangladeshi and Pakistani communities that you've absolutely highlighted. So I come from a Bangladeshi heritage background, and I have lots of friends and relatives who perhaps live in somewhere like, deepest Tower Hamlets, which is one of the most deprived areas in the country, not just London, but in the country. Those insurance, that car insurance, where I pay what I pay where I live, that would be, I reckon, about threefold in wards that I know in Tower Hamlets. And that's where it becomes problematic, and that's where there needs to be a step in on a regulatory basis, because it does, and I think unintentionally, but because of the way the system is set up, it becomes a problem, and it does become real discrimination.
Yeah.
It's politics versus economics, isn't it?
Yeah.
Economics likes discrimination, politics doesn't.
Absolutely. And what really interests me when I have conversations with social policymakers and regulators, I even remember having a conversation with the board of a substantial regulator, and saying, when you determine your price cap, who's in the room? Is it economists, competition specialists, policy people like me, or are there any people actually who you set the price for in that room, and how it affects them, and what does good look like to them? But anyway, just going on to data. Everybody loves data, and I agree. It's about how we use that data, and it's also about how people can have control over how you use your data. When I talk to individual insurers, it's almost as if there's two tracks. Some will say we shouldn't be moving away from pooled risk. That's where our roots are. And others saying, data, we've got to get down to individual merit, and that's what's right. So it's that whole debate going on. But if we're going to rely on the market rather than the state for lots of people's income shocks, the government has to set what is a minimum level of protection that market is supposed to provide, and what is affordable for that, and who can be discriminated amongst that, if we're shifting responsibility to individual people, consumers, or whatever. Oh, sorry, one more thing, transparency. Yes. So
Opening up the black boxes.
If insurers are saying everything is fine, and I remember once I was a commissioner on the extra costs for disabled people, and I remember talking to a particular insurer and saying, here are examples. If you're disabled, you're getting a really bad deal in the insurance market. And I said, it's not, the market isn't working well. Yes, I can't prove market failure. There's only a couple of us. And he said, no, you cannot prove it, can you? And I said, no, but I said, you can, and your insurers can. You've got all the data. And he smiled and said to me, we don't have to. And I thought that was really telling as a consumer advocate. I mean, it filled me with gusto to do a bit more work on the area. But these are the questions that have been laid open, even at Treasury Select Committee, with the regulator, and everybody just bounds them around. Who is being discriminated against?
Thank you. I should say, a couple of people mentioned risk transfer, and actually, to advertise other bits of the SMF conference events program, we're doing a matching event with our friends at the Institute next week in Manchester, and we're going to Conservative Party as well, talking about slightly wider terms about that question of the transfer of risk from institutions to individuals. So we'll be there's part 2 of this conversation next week. Now, I'm going to go to questions with our remaining 9 minutes left. You can actually kick us off, because none of you have yet put a flipper in the air to say you want to ask a question. So I'm actually going to go. Oh no! In fact, they're there. Right, you can go first. Then I'm going to Twitter, because the internet is taking part in the debate as well. So, but yeah, the lady there, your question or thought.
I'm from Beckenham CLP. I used to work. I haven't worked with actuaries for a good 30 years, so they may have moved on. Who knows? I'm questioning your premise that the debate is between economics and politics. I've come completely afresh from it. I haven't even read the paper. Sorry. But I'm wondering whether it's more a moral, whether it's more a moral issue. You're all talking, I mean, not just going back to the 19th century morality of life assurance, give me half an hour and I'll fly on about that. But you've all used the language of morality, which is maybe even more fundamental than economics or politics. Marina talked about punishment. That's a moral term. Hilary talked about rewarding good behaviour. And then Martin talked about individual merit. I'm just wondering where the morality comes into it. I don't have an answer.
I'm glad I don't have to answer that one. Who wants to? He wants to go first. Marina, maybe the morals of the market.
We live allegedly in a civilized society, and if we live in a civilized society, then we have to have a level of morality, and that morality has to be we take care of the people least able to take care of themselves, and that is where the morality takes place. The state needs to step in, and I think this whole debate and the premise of the whole report is that things need to be done, and a lot of those things need to be done by government and the agencies involved in that. So that's where the morality comes in, that actually we need to sit, whether it's insurance, whether it's benefits, whatever, it's about accepting that we cannot just stand by when it doesn't work out for people.
Thank you. Hilary, is there morality in actuarial science?
So interestingly, we do have a concept in actuarial work, moral risk. And moral risk is in a technical sense, the way that we tend to use it is about, if somebody has insurance, does that make them take too much risk? So, for example, does somebody who has car insurance drive more carelessly? Does somebody who has house insurance fail to lock their doors? And so we do worry about that. I guess the point I would make is that if your argument is that it's not moral to exclude a layer of people from the ability to afford a basic level of cover, then I think I would agree with all the points that have been made earlier that is something that the market on its own probably can't resolve. That does need some level of government intervention, because as Martin said, if one insurer were to take that kind of an approach, probably would go bust quite quickly. So I think that is something where it does need to be a decision that is reached at a political level, and government intervention is then needed to make it work.
Just to add, I'm guessing you're an expert in this area, so I'm sure my answer is going to be very.
Well,
I often think that the market is amoral, but with moral things to do, and I think that's the issue.
I'm not going to talk about Adam Smith's theory of market and moral sentiments, but you probably will do another about that another time. Gentleman there, and then I'm from Twitter. Twitter is watching on the camera, but I'll take Twitter questions.
Thank you very much. My name's Alistair Ross. I'm with the Association, and I think it's been a really interesting and helpful conversation, and it's opened up a lot of different lines of discussion. But I wonder if you go back just to what Hilary said earlier on about where innovation can play a role. So you mentioned the example of young drivers being able to access more affordable car insurance based on the data that they share through the black boxes, the telematics of the cars. I mean, there's also been innovation around improving availability of contents insurance for low-income renters. So there are areas where data can be used to help that innovation. Does that still work if we were to move across towards a more mutualised model? Can you still use that kind of data to innovate and tailor solutions for more specific groups within society under what you're talking about?
Can we fix can we fix this problem while keeping the good stuff? Is that simple? All right, who wants to go first on that? Martin, you're the chief fixer here.
Right. I guess this goes down to the question around we need government to set out what is a minimum level of protection if we're going to outsource risk to the market. And once we understand that, we can look at all the different WYSIWYG ways that we can use data, etc. And I know the arguments, and there's some great arguments about it encourages people to have better behaviour. You see these ads that say, if you go to the gym more, your insurer will give you. What if you can't go to the gym? What if you have a disability? You can't go to the gym. These are the questions. It looks great as a headline, but as soon as you go under it, we need to go for regulation or intervention. So I'm trying really hard, and I'll get into that innovation bubble with you, for sure. So definitely up for talking.
And I think you can use innovation in ways other than just premium pricing. So my Japan example was about, how do you really drive forward really good customer care and service by using data? rather than just using that data in a pricing mechanism.
I absolutely love that word innovation because I think it opens up so many doors. So we've just gone through a terrible time in the world, but the one positive that I took from that was the innovative ways that people started to work and to do things. You know, even going to the cinema, you could actually go to the cinema during the pandemic because people were setting up these, you know, these drive-in big screens. So you could just sit there, take your own popcorn and just keep your window closed and watch a film with lots of other people around you. And I thought that was a brilliant idea. And we talked, so we have the opportunity. So this is a problem, it's an issue, and it needs innovative answers. And I think we talked earlier about, you know, you were talking about the micro insurance and the fact that that might not be something, or people might not see it as something that works in the Western world where we're used to micro types of insurance or finance in underdeveloped countries. I don't think we should be scared of things like that. We have so much to learn. So where things like micro banking comes in, micro loans come in, so big shout out here for Bangladesh, but this is really brilliant. So Professor Yunus from a company called, an organisation called BRAC, about 15 years ago, won a Nobel Prize because the innovation for the micro banks was adopted in the States, and it was something that absolutely worked. So there's nothing to be scared of. It was an innovative way of dealing with a fundamental problem. So it's about being creative, and I think I'm quite optimistic when there's a problem because I think we can solve them innovatively.
Thank you. Now I'm going to give the last question to cyberspace. We have a question from Twitter. I haven't been told who it is, who they are on Twitter. Obviously, they're following the debate closely. Anonymous. Well, anyway, the question which the panel will try and answer in 60 seconds in total, because we're now at 11 o'clock. Does the panel agree that there is space for a disruptor to buck personalization trend in pricing profile to offer a truly white label product? Or is it only regulation required? Question mark. That's good. Well, a relatively niche question, I suppose, and we may have we can just continue that conversation with friends from the industry actors over vacant sandwiches as well. But you know, Mark and Hilary, you're both nodding enthusiastically at the prospect of white label products.
I think that the problem with this idea that you have a disruptor who comes and approaches this whole thing differently is the point I made before, that, you know, the problem is that you would get massive selection against that insurer. So one insurer comes in on their own and says, I'll price everybody for motor insurance exactly the same. All the expensive risk people will go to that insurer. All the cheap risk people will not go to that insurer. And that will drive up the premium that disruptor has to charge. So it kind of feels to me that can't work without some kind of market intervention.
Yeah.
Sorry. No.
At FairByDesign, I lead the advocacy work, but we also have a fund. And I love this because actually the fund puts money, we put our money where our mouth is. What's super interesting, we haven't been able to find one insurer to disrupt it. And I think that gives credibility to the advocacy arm, because we can actually say, we believe in competition. That you actually do need to have some type of intervention.
And this is the difference here. So not being in insurance, but I listened to that and thought, what? So this goes back to my previous answer about innovation. So if somebody were to come in with a really innovative idea, that I think would be the disruptor. Did that make sense as somebody who's got no idea what disruptor is?
Yes. Maybe the Mayor of London could see it instead of a public interest company, right? No,
I'll suggest it to him. I doubt you won't get an answer.
Well, anyway, we are now 1 minute over our allotted time, so I'm actually going to draw things to a close there. I'm going to thank you all very much for coming. Thank you very much to the IFA for sponsoring this event, working with us. Thank you to the internet for joining us. Hope to see you and the internet again in Manchester for our risk transfer event next week. Before we go, can we just give a hand of thanks to our panelists? And do take a time for your way out.